Hi everyone, welcome back to the channel. Today we're going to go through the process of buying a house step by step. If you've been thinking about taking this big step, this guy is going to break it down to 11 easy steps for you to follow so that you feel confident in your home buying journey. Let's get started. Step 1. Are you ready to own a house? Before anything, you need to evaluate if you're ready for home ownership. It's a major financial commitment, so ask yourself some key questions. First of all, you need to make sure that you have a steady income and stable employment. A regular check will help you budget and make it easier to plan. If your income fluctuates and you're self-employed, having a 6 to 12 month of reserve is a good idea. Next, you need to check your DTI ratio. This is the percentage of your gross income that goes toward your debt payment. Ideally, this should be below 30%. A higher ratio could make getting a loan harder. Lastly, what you need to do is find out your credit score. A good credit score can save you a lot of money through lowering the interest rate. The FICO score range from 300 to 850, so a score of 750 or above will help you get the best rate out there. If your score is not where you want it to be, take the step to improve those credit score before you apply for a mortgage. Next step, step 2 is know how much home you can afford. This is crucial. You don't want to be house poor, spending too much money on your mortgage and not having enough left for the other expenses. A good rule of thumb is you spend no more than 30% of your net income on housing costs, which includes the principal, interest, property tax, and insurance. Uh, Now you can find a great tool online like an affordability calculator that factor in your income and expenses to help you determine your budget. Make sure you consider all costs, not just the mortgage, when you calculate your affordability index. The next step, step number 3, is to prepare your down payment and closing costs. Your down payment is the cash that you put up front, and the rest is covered by a mortgage. Most people put down 3.5 to 20% of their house price as a down payment. If you can put 20% down, you can avoid a PMI, which is a poor, it's called private mortgage insurance from the lender. This gives the lender extra costs to protect the lender. For example, if you put down 20% of $100 property, that means you have to put down $20,000. In addition to the down payment, don't forget about the closing costs. These are these are like appraisal, a title, and more. Set aside around 3% of the home price for the closing costs. The next step, step 4, is to get a pre-approval from a lender. Before you start house hunting, visit your bank or a lender to get a pre-approval for the mortgage. They'll check your income, credit score, and debt, then give you a pre-approval letter stating how much money you can borrow, the amount you can borrow. This will help you to budget for your monthly expenses. A pre-approval letter will make you a stronger buyer when you have like an offer because the seller know that you're is serious. This will help you to get the under contract faster. Uh, then we go to step number 5 is to work with a real estate agent. So finding the right real estate agent is key, especially if this is the first home. Uh, the guy you do the whole process and of negotiating for you and handle all the paperwork for you. Best of all, you typically can negotiate to have the seller pay for their commission as well. Step number 6, start your house hunting. Now the fun part begin. Make a list of what you want in the home, like the number of bedroom, the number of bathroom, the location, and feature that you like a yard or a garage. Rate these priorities so that you know what is a must-have and what is a nice-to-have. Uh, this helps your agent to find the best match for you. Most property also provide a price per square feet that can also be used as a comparison. Then the next step, step 7, is to make an offer and negotiate. Once you find a house that you love, it's time to make an offer. Work with your agent to submit a written offer, and remember everything is negotiable from the price to the appliance. Seller may accept, reject, or counter offers, and you can negotiate until you reach an agreement. Now, some state do kind of like not allow for any kind of like letters to the seller, because they might deem that like discriminatory. So what I usually do is I don't write, I don't recommend my buyers to write letters to the seller, but I do put it in my offers email to the agent that my buyers are plan to live there and they're not investor, because some owner, they really love their property because they've been living there for so long, and they don't want like an investor come in and disturb the neighborhood that they love so for so long. So if you can point out to the agent that it's somebody that can buy and move in with a nice family that moving in, then that might sometime might be a good idea as well. And make sure that the more money you down, the better your offer will be. Of course, if there's a cash offer on the table, then usually the seller's gonna pick the cash offer because there's no obligation on the loan side. But the more you can down, the better your chance will be. Step number 8 is to get an inspection and appraisal. After your offer is accepted, it's time to get the inspection and the appraisal done. The home inspection will review any issue with the home. The termite report will provide you with a clear picture of any termite issue that the property might have and how much it will cost to fix them. If the seller refuses to clear the termite, I still suggest that you get the termite inspection done. Sometimes it might cost you like $100 to get the inspection. I have a guy who do that for $100, and then if you end up working with him like to do the clear the termite at the after escrow close, then he will credit you back the $100 toward the final pay. So, but in any event, make sure you have the termite done, because then you find out how much it's gonna cost to fix the termite. Sometimes it might range from a couple thousand to like ten of thousand. So as it's best to know how much it costs to clear the termite, even if the seller is not the one that paying for it. And then the other thing is the appraiser will confirm the value of the lender for the lender, so that they know that it's not like overbid, it's not like over purchased, too much over the purchase price. If the inspection and the turn up a problem, you can use it as ammo to negotiate, repair, or ask for a price reduction. There's a couple of things you can do if there's too much issue with the inspection. You can ask for a discount on the house price, like lower the price. For example, if it's a million, then lower it by like 5 to 10,000. That work. Or you can ask for credit back. Now the difference between discount and the credit back is, if you're borderline, you borrow like, let's say you borrow 80% and you don't have any more money to put down, then it's better to negotiate the credit back, because then you can use that money, you borrow that money from the lender to do whatever fix you need to do, or you can negotiate the seller to fix the problem for you, the issue for you. Now, step number 9 is to finalize your mortgage. With the inspection and appraisal done, your lender will finalize this mortgage. At this step, you will have to tell them if you want to lock in your rate, because if you lock in the rate, then the rate cannot be changed anymore for a certain period of time. And then they will also verify your employment at this point. So make sure that they can reach your employer to verify your employment. I've seen cases where the lender the loan get delayed because the lender cannot get a hold of your employer to verify that you're still working at that company. So make sure that no matter what, they have access to your employer, like direct phone number, maybe the head of HR department to verify your employment, because that can hold the loan back if they can't verify your employment. And then you also review and sign your loan doc at this step. Make sure that you review all the document carefully and don't hesitate to ask any question. I typically ask the escrow company to send over the closing statement, which is how much money the buyer have to bring in to close the deal, and I review that before the signing. One time I caught like a $13,000 extra charges on the closing statement, and have to rush to have the lender reissue the have the escrow recalculate the fees, and the lender reissue the document before signing. Then the step number 10 is the final walkthrough. This is the last time you visit the property before you officially become the new owner. Make sure the seller show you everything to confirm that everything is in working order. Uh, and there are no new damages. If they agree to fix anything from the inspection, then make sure they point that out and you verify that all those items has been fixed as well. And then after that, step number 11, just to move in and enjoy your new home. And congratulations, you're now a new homeowner. The final step is to moving in and making your new home feel like homes. The new house feel like homes. Time to settle in and start enjoying the reward and owning your home place. Uh, and that's it. So there you have it. That's the 11th step of buying a house. It seemed like a lot, but with the right preparation and guidance, it's totally manageable. If you found this video helpful, and please hit the like button and subscribe to my channel for more real estate tip. If you need help, need assistance in buying or selling home, please reach out to me and I'll do my best to help you out. And thank you for watching and see you next time.